Well, home prices in the GTA recorded another drop in prices as the impact of rising interest rates kicks into full gear. So for a look at what's taking shape and in store is Royal LePage President and CEO Phil Soper. Phil, good to talk to you this morning. Phil, interesting that you're kind of taking another look at the numbers based on where the market's going. How would you describe the sort of feeling at Royal LePage about the housing market? Is it concern? Is it worry? Where are you on that?
Well, we entered the fall without the typical bump in fall market volume. Normally we'd see sales, the number of sales, not prices, bump up in September after the summer break, and it didn't happen this year. In fact, sales dipped a little bit month to month, which is a clear indication that we're not through this market correction yet. That said, the home prices themselves are changing at a very slow rate. Mm-hmm. We're looking at about 2% up year over year in the GTA, and about 6% down from the last quarter in the spring, where we saw most of the price changes, the price reduction. So call it the market is treading water right now, waiting to see what happens to monetary policy. Mm-hmm.
Mm-hmm. And Phil, does this in any way change the amount of housing in terms of supply that's out there right now, or we're not seeing any of that yet?
Well, it is causing some new projects to get delayed. The cost of labor, the cost of materials, is rising, and home prices are flat or falling, depending what part of the country and the city you're in. So some developments have stalled. However, most are going ahead because we have this structural shortage of homes in the country, which is really what's been behind the high level of price appreciation over the last decade. And very soon, once we're through this rising rate environment, we've got inflation under control, we're going to have to start worrying about home prices rising too rapidly again.
It's such a sort of yo-yo almost, isn't it, Phil, the way the sort of market goes up and down. And like you alluded to sort of the monetary policy, we've heard from Tiff Macklem, the governor of the Bank of Canada, that the bank intends to continue raising interest rates. But, you know, everyone needs a place to live, whether you're renting or buying. People, of course, in many cases want to buy and own a home. And while prices appear to be coming down, the cost of borrowing just continues to go up. So it's not necessarily cheaper. It's just the math changes. The calculations just change.
Yeah, no, that's it. And it's the reason there's still thousands of people buying homes in southern Ontario, because they realize if they're going to borrow to buy the home, which most people do, most people have mortgages, it's going to get more expensive. So it's a trade-off, just as you've pointed to. The good news is the long-term prospects for the country, particularly the country's housing market, are very solid. The population's growing at a faster rate than other advanced nations, other G20 or G7 OECD countries. And, people are working. Unemployment's still very low. So we really just have to work through this period of unsettled economic times and get inflation under control, and the housing market will be back on its feet.
Mm-hmm. And Phil, last question for you very quickly. For people watching and wondering, should I sell, should I buy? What's your advice to them right now?
Well, if you're an existing homeowner, you're selling and buying in the same market. So it matters not. Buy when it makes sense for your family. If your home sells for a little less than it would have, the one you buy is going to be a little less than you would have paid before. If you're a first-time home buyer, it's that trade-off between rising rates and potentially lower prices. So again, when it makes sense for you, rents are high. If you've got the financing in place, if you've got the support, it's not a bad time to buy. The only group I'd say be cautious is if you're an older Canadian. It may not be the right time to be taking risk on, say, upscaling.
Right. Okay, well, Phil Soper, thanks for helping us kind of make sense of these latest numbers. He's the president, of course, and CEO of Royal LePage. Great to talk to you again this morning, Phil. Thanks.
Thank you.
Have a good day.